Hey guys, welcome to Directional Bias. So now you should have watched the 4-hour plotting highs and lows video first. And moving into Directional Bias, which is what do we do, how do we act, when do we act when we get interaction with these 4-hour liquidity pools. So why do we do this? This gives us our directional bias, which is how to start with building that trade idea. We have our 4-hour range, we've plotted our highs and lows, and what we're doing is we're waiting for that first interaction to give us that bias. Directional bias is actually based on liquidation of levels on the 4-hour time frame. You could call them liquidity pools, these fractal highs and lows, and the momentum or lack of momentum with price action that shows us. So we're looking for candlestick closures on the 4-hour with these interaction points and the scenarios that it's giving us. It gives us the information we need, as well as the confidence to either say we are buying or we are selling, and then basing that trade idea off of that narrative. So the types of directional bias we have, first into two different categories. You've got pro bias and you've got counter bias. What I mean by that is if we get a lack of momentum to the upside, then we're looking for reversal. So we're looking for sells in premium. But we can counter that anticipating a pullback. When price pulls down into discount, we can counter that and say, okay, price may pull back into premium again. We can buy into that. This is optional. This is something you need to go and do your testing on, and I'll cover it with some chart examples. But basically we've got follow through and no follow through. Follow through is basically price following through in that same direction. So if we've got higher highs and higher lows, we get an interaction with a higher high, and then it keeps going. That's follow through. No follow through is when we get either a bullish candle followed by a bearish candle for reversal to the downside, and vice versa, or a wick closure on a fractal low or high straight away. And that's essentially our sign of a reversal point. And then strong follow through is just increased amount of momentum. So it's the same as follow through, apart from we're not anticipating price to pull back first. We can carry on trading more aggressively in that direction. So let's go through some chart examples and we'll draw through on EU and make sure that you've nailed this down. So we've got EU on the chart here, and we know that we have our high here because it's the highest point. This is the most obvious point to start, and we trail back to the most recent fractal low. Since then, price is contained within that range. So we are basically waiting for the next interaction. Again, excuse anything to the left. We're going to start this video from the next interaction. So it interacts with the low first, and we wait for it to close. This is the important thing. We don't trade while that candle that's interacted is still moving. We wait for it to close first. It closes as a wick. So what does this mean? It means we're looking at a potential reversal. So no follow through. Now again, nothing is 100% strike rate. No one has the golden relic. But if your data can provide over a period of 6, 12, 18, 24 months profitability, then you've got a mechanical edge that works over time that you can trust in terms of probabilities, right? We've also got a new fractal high. So this becomes our new 4-hour dealing range just on the previous video. And we have our bias, our pro bias of looking for buys, at least temporarily. Now, if we're looking at counter play, then we can anticipate if price is in premium that we can sell back into discount prices. But do your own due diligence, do your own testing on this, and then you can toggle them on and off and say, okay, this is the gain based on pro bias moves, and this is the gain based on counter plays. If I toggle one on and one off, am I going to get better percentage over a year? Am I going to increase or decrease my strike rate, and am I okay with that? So let's play this forwards. As you can see, price does take off to the upside. So in that case, the directional bias was correct. So what does it do next? In that same candle, it actually takes the high because the range is small, and it closes with a wick. So same thing, we get no follow through. No follow through to the upside means a reversal to the downside. So what is pro directional bias? It's immediate sells in premium. What's counter bias? Counter bias would be buys once it pops back into discount. And again, that's up to you to take that. I won't mention that again in the video. So let's play this forward and see what happens. Price is dropping lower, and wait for the next interaction. So again, you know, two scenarios, 100% strike rate in terms of directional bias. You're not always going to get that. But if you're right 50% of the time in terms of directional bias and 40% or above in terms of your entry, then you're laughing. So we've got an interaction with a low. Our previous low is our interaction point. So it's not always the most recent fractal. It's the actual range low that was there. Again, we get a wick. Same thing, no follow through, new fractal high, drag that down. This is our dealing range. Pro bias is looking for buys. Doesn't mean it's always going to play out, but that is what momentum is telling us. Okay, it's a run on liquidity, it's a candle closure, and it's based on price action and either momentum or lack of. When you get a wick, it's showing rejection to the area. This is not based on trend, it's based on liquidity and momentum. So we'll see what happens next with the next candle. And this is what can happen time and time again, where you get a scenario that's one thing and it can change into another scenario. And you just need to be able to evolve with that. So this time, after a wick, we get a bearish body close. Now, one bearish or one bullish body close is actually unconfirmed bias. It doesn't matter if it's the highs or the lows. If you've got one body close, you're waiting for another 4-hour candle. You're doing nothing in that case, okay? So this is now unconfirmed. So you just switch that to this and you're doing nothing. You're off doing other things. You're working, looking after kids, whatever else you're doing, or you're looking at another pair if you trade more than one. And then you come back after another 4 hours, if it's trading hours, and then you can see we get a bullish candle close. We're waiting for the closure. So this is the other scenario for no follow through. Either is an immediate wick close, or it's a bearish close followed immediately by a bullish close. Opposite way around, if it takes the high with a bullish close, it's unconfirmed. And if the immediate candle after that is bearish, that's NFT to the downside. So it's back to no follow through again. Pro directional bias is bullish, but this candle closed in premium already, so likely not looking for trades buying in that area. You'd want price to come back into discount for that, and it just carries on and takes that high. So here we get a bullish body close, so it's unconfirmed. Move our range high up. There's no new fractal lows printed, so we'll keep that range there. Unconfirmed bias till we get a second candle close. How does it close? Closes as a bearish body. So from unconfirmed to no follow through. Again, it's showing a lack of momentum. You see the pattern here. Now this can turn into follow through. If we get a bullish candle after this, that would be the second body close above this fractal interaction point. But we'll see what happens. It could just drop out the sky. What have we got? We get a bullish body. So now no follow through becomes follow through. It doesn't matter that we had a bearish body close in between. The fact that we've got two body closes now above the previous fractal high, which was our previous range high. Now we've got follow through to the upside. We're seeing some kind of momentum, but we would want to wait for price to get back into the discount zone for buys in this scenario. Let's just keep following through with our directional bias. Just extending this range higher, a new fractal high. That doesn't sweep, that just pulls lower. Prints an internal fractal and another one, and we're ignoring those. We're only looking at external fractal points. Now in this case, you can look for counter plays, especially in a wider range. If price is pulled quite significantly, a number of days, we've got a wide 4-hour range, and we are anticipating after follow through that price is going to drop back into discount before looking for buys. That's when we would recommend looking for potentially some counterplay moves, so selling into discount. And you can see that you could potentially have immediately looked to sell. Then when it gets into discount pricing, you're looking for buys. Again, selling when it jumps back into premium, and then discount looking for buys. One final time, comes higher into premium, and then down here you're looking for buys. What do we happen next? It goes and takes the low. But you can see that's why we've implemented these counter play moves, because when you're getting larger ranges, if you don't want to be sitting on your hands waiting for opportunity for potentially 3 or 4 days, then you can get involved in more opportunities, knowing that counter play moves will slightly decrease your strike rate. So, interaction with the low. Previous low is our interaction point. We get a wick close, so it's no follow through. The next candle closure there is irrelevant because we had no follow through anyway with that wick, and this is our new range high. What do we get next? Remember what the bias is for no follow through to the downside? It's immediate buys. This is the pro directional bias. So again, we're likely seeing some moves, especially in this second pullback. There's maybe some buy opportunities in there. And then takes the lows. One candle body close is unconfirmed. You remember it from over here. Now this interaction is the previous range low, remember, not always the most recent. If it's the previous range low or high, then that's the interaction point. So in one more candle for confirmation of directional bias, and it's a bullish candle, so we get no follow through. So this is showing momentum to the downside is potentially drying up, and we could be seeing a push to the upside. We'll see what happens. That's why you're trusting in your entry model. At that point, if it's in kill zone, in trading hours, you'd be on the 15-minute, you'd be setting alerts on 15-minute fractal pulls. But it drops lower. Second body close is follow through. So now no follow through turns into follow through, just like it did over here. So you need to be able to evolve and adapt your ranges and your interaction points accordingly to be on the right side of the market. Now pro bias is sells from premium. Counter would be buying from here, but you do that obviously at your own risk with a lower strike rate. Over a period of time, it's more profitable than not using it, but you will suffer more losses doing that. What's it going to do? Drops lower. Exactly what I meant there. If you are looking for counter plays, you could potentially have found yourself in a losing trade here, which you're not going to avoid, by the way. But if you were simply waiting for pro directional bias, you would be sat there on your hands doing nothing, and then we would add a new interaction anyway. So new interaction here, new range high is this fractal. Previous low here, unconfirmed, right? And we'll do a few more until we see all the scenarios. Now what do we get here? Two consecutive bearish body closures without a initial wick close like this, and without a bullish candle in between. What does that mean? That means we've got strong follow through, and we've got a new range high as well. So in this case, and of course it's not foolproof, it's not 100% of the time, but we noticed that with strong follow through, it's true increase in momentum to the downside in this case, so we can look for immediate buys. So we'll be looking for buys basically straight away. What do we get? We get a slight pullback. Let's just extend this range. And with strong follow through as well, it doesn't mean that you can't wait for premium pricing to sell. You can sell anywhere in this range. Obviously knowing that, especially in a bearish market, producing lower lows and lower highs, right? You can't avoid that zooming out. But we're trading with momentum on interaction points. You are more likely to see successful sells in premium pricing, but with strong follow through, you can still take some winning trades. Like this pullback in here is potentially a 15-minute entry to sell. As long as you can get a minimum 2-to-1 on a strong follow through before the range low, or a minimum 3-to-1 on follow through and no follow through scenarios, you can take that trade. New low, new high, and interaction point. One candle bearish body, unconfirmed. We need one more candle. What do we get? Same again. Second consecutive body close with no initial wick and no bullish candle in between. We get a new range high too. Don't miss that one. Small range, so it might not last very long, but with strong follow through, we can sell anywhere in this range. We're not having to wait for it to come into premium. We'll see what happens. We're following that potential momentum. So we do get a pullback. Just expand that. And it continues lower again. So it does just come into premium. I wouldn't say it's well priced. We'll move on to that video next. But with strong follow through, we don't mind because you can sell anywhere. So there's definitely at least one opportunity, just for experience, me looking at that from the outside and in the 4 hour, that we could have got involved in if we weren't waiting for premium pricing. There's potentially 2 or 3 opportunities to sell the market here. Let's go for one more scenario before we move on. So what did we get? A new fractal low. We actually get a wick first, which was NFT. And then I fast forward a little bit too fast. So we get a body close, which is unconfirmed. So even if you get an initial wick first, which confirms a no follow through scenario, if you get a body close after that, that becomes unconfirmed. Again, be prepared to change your bias based on candle closures. We need one more candle to confirm. Okay, the second bearish. Is this strong follow through? It's not. Why? For the one simple reason that we initially got a wick. And it's a telltale sign that we might not see as much momentum as we would with 2 consecutive body closes. So this is our standard follow through scenario. And now we will be waiting for price to pull into premium before we continue our pro directional bias move, which is sells. You can counterplay and look for buys. Just like you can see, this may pull into premium and then dive lower, which would be, our ideal scenario. Counter directional bias this, looking for buys, and then when it's in premium, looking to sell that, following momentum to the downside. Or it may take the high and we'll just deal with whatever scenario we get given, right? So we're in premium, and then it does actually go on eventually to take the lows. So by now, this should have given you a good example of when it's unconfirmed, when we've got follow through, when we have no follow through, our reversal, and when we've got strong follow through, showing that true momentum in the market, and how to wait or utilize on our trade ideas.